For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. In today's analysis, we will take a deep dive into SoFi Technologies, particularly in light of the broader artificial intelligence-driven market sell-off. A recent AI stock sell-off was triggered by investor concerns over the potential disruption that DeepSeek's artificial intelligence advancements could bring to the market, particularly regarding their ability to develop high-performance models at a fraction of the cost typically associated with artificial intelligence research. This sudden realization sent shockwaves through the artificial intelligence sector, leading to a broad decline in stocks that had previously benefited from artificial intelligence hype. One of the most significant casualties of this sell-off was a well-known graphics processing unit manufacturer, which saw its stock price plummet by over 17% in a single day. This steep decline came as a surprise to many, given that the company had been one of the biggest beneficiaries of the artificial intelligence boom. Jim Cramer, a longtime supporter of the graphics processing unit manufacturer, weighed in on the situation, emphasizing that the most crucial question now is whether the company's orders for artificial intelligence hardware will actually be fulfilled. Cramer also highlighted the broader implications of this sell-off, particularly in how it affected what he refers to as traveler stocks. Companies that have benefited from the overall artificial intelligence momentum, despite not being directly involved in artificial intelligence development. He pointed out that several sectors, including nuclear energy, meme stocks, and cryptocurrency-related stocks, saw simultaneous declines alongside artificial intelligence stocks. According to Cramer, this type of market behavior indicates that these stocks are being treated as part of a single speculative trade rather than being valued based on their individual fundamentals. Cramer expressed concern about this trend, stating that when a group of stocks begins to move in unison, it often signals excessive speculation in the market. He warned that this kind of hype-driven trading can lead to sharp corrections, as seen in the recent artificial intelligence sell-off. In addition to analyzing market movements, Cramer shared his personal experience using DeepSeek's R1 model. As an avid user of artificial intelligence tools for stock research, he has previously praised ChatGPT for its ability to assist with financial analysis. However, his experience with R1 was less than impressive. Cramer attempted to use DeepSeek's artificial intelligence to retrieve historical stock performance data for Netflix from the year 2010, but the model was unable to provide the requested information. He found this limitation frustrating, arguing that such data should be easily accessible. This experience left him skeptical about the overall utility of DeepSeek's artificial intelligence, at least in its current form. Another issue he raised was the level of censorship within the R1 model. As a Chinese-developed artificial intelligence system, DeepSeek appears to have restrictions on certain topics. Cramer provided an example in which he asked the model about the well-known Tankman photograph taken during the events of June 5th, 1989. Initially, R1 correctly identified the image, but shortly afterward, it retracted its response and claimed that it could no longer provide information on the topic. This level of censorship raised concerns for Cramer about the transparency and reliability of the model. When co-host Carl Quintanilla asked Cramer whether artificial intelligence stocks were still worth buying after the sell-off, Cramer admitted that he did not have a definitive answer. He explained that sometimes it is better to acknowledge uncertainty rather than make rushed investment decisions. He also pointed out that there had been a debate among market analysts before his Monday appearance about whether they should try to provide a clear recommendation or simply state that they were unsure. Given the severity of the sell-off, Cramer felt that the best approach was to acknowledge the complexity of the situation and avoid making premature conclusions. Despite the uncertainty, he posed a critical question. Should investors bet against influential figures such as Mark Zuckerberg and Larry Ellison? He suggested that sometimes, rather than reacting impulsively to market movements, it is better to step back and consider the long-term potential of artificial intelligence investments. Another key topic discussed was the impact of open-source artificial intelligence on the broader artificial intelligence ecosystem. Similar to Mark Zuckerberg's artificial intelligence initiatives, DeepSeek has adopted an open-source approach. When asked whether this could pose a threat to the industry, Cramer acknowledged the ongoing challenges related to semiconductor allocation. He questioned whether open-source artificial intelligence would reduce the demand for high-performance computing chips, but noted that this is not necessarily the case. The demand for artificial intelligence hardware remains strong, and while open-source artificial intelligence might introduce new efficiencies, it does not eliminate the need for advanced hardware. Amidst the sell-off in technology stocks, Cramer observed a strong rotation into healthcare stocks. He pointed out that the healthcare sector had demonstrated significant strength in recent weeks, making it an attractive alternative for investors looking to shift their focus away from technology. SoFi Technologies, a financial services and technology company, was among the stocks affected by the artificial intelligence-driven market decline. Its stock dropped by 10% on Monday, largely due to the broader investor panic surrounding DeepSeek. However, Cramer emphasized that SoFi's fundamentals remain strong. Despite the recent decline, SoFi had gained over 26% since the beginning of the year, demonstrating consistent performance. SoFi has shifted its focus slightly more toward financial services rather than traditional banking, a move that Cramer believes has strengthened its business model. Previously, the stock was heavily targeted by short sellers, but the company has managed to build a more stable foundation. SoFi recently reported its latest quarterly results, and while the numbers were generally positive, the market had expected $905 million, but SoFi reported $845 million instead. Cramer argued that this minor shortfall should not have triggered a major sell-off, as the company remains fundamentally strong. However, he noted that SoFi was caught up in the broader market movement, with red-hot stocks trading as a group. Cramer acknowledged the appeal of buying SoFi stock after such a sharp decline, but also recognized that some investors might prefer to wait and see how the market behaves throughout the trading day before making any decisions. Overall, SoFi ranks 12th among the stocks discussed by Jim Cramer in relation to the DeepSeek artificial intelligence sell-off. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.